Hey guys, Max here, and this is your daily market update for yesterday, Wednesday, the 22nd of December. We're going to see what happened in the markets, then move on to some stories with China, some stuff in the crypto space, and then of course back to Elon. So let's get right back into it. So there's a lot of news going about at the moment about the Omicron variant being less severe than initially thought, and this news is gaining traction and stocks are rallying as a result, as restrictions are just looking a little bit less likely. The S&P 500 is up, the Nasdaq is up, the Dow Jones is all up. The US is up in general, just a little bit, 1% on the day across most markets. Europe is doing a little bit better as well, as is Asia. In particular, travel and hospitality, some sectors that you would expect to be hurt by more restrictions, have started to recover a bit. We are also seeing news of a new pill that's just been approved to fight COVID from Pfizer. That's come out and that's now been allowed to use, and that should help treat people as well. More weapons in the arsenal, and that is definitely good news as well. Basically, what we're really seeing is that market sentiment regarding the Omicron variant is starting to actually look quite positive right now, despite the high case numbers, and hospitalizations aren't too high as well, which is good news, and deaths are very low indeed. Really though, this is all about uncertainty and certainty, and as we're getting further away from finding out that Omicron exists, we're starting to learn more about the variant, we're getting more certain as to how transmissive it is, how dangerous it is, and markets hate uncertainty. So the fact that we're getting more data every day, the fact that we're learning more about the variant every day, it means that volatility is going to start to trend downwards a bit, hopefully at least, and we should see markets head back to normality. We have seen a big spike in energy prices again in Europe, but in response to that, liquefied natural gas is being sent over in basically fuel tankers from the US to Europe to try and ease this energy crisis, because Russia is still throttling supply, and news of this happening, of these tankers heading off with all this liquefied natural gas, has dropped the prices a little bit as the markets are pricing in increased supply in the short future. Other than that, everything's pretty much the same as it was the day before. Gold and treasuries are sitting mostly unchanged. Oil is very similar to where it's been sitting as well. The dollar's mostly unchanged, as with most currencies actually, apart from of course the Turkish lira, which is continuing to devalue. Yesterday was for the most part a pretty tame day as far as the indexes go, but today we get some big news from the Bank of Japan and the US on jobless claims, consumer income and consumer sentiment, so it could be a little bit less tame today. We are, of course, though, nearing in on Christmas. People are taking holidays, less people are trading, and we will have a short additional break as markets close for the holiday. Now, moving on, there are some fairly big developments in China, and the first one is that Sinovac, the vaccine made by China and one of the most common vaccines in the world, doesn't work well against Omicron variant. Even with a third booster shot, it isn't effective enough to stop people from catching it, getting ill and hospitalized. And this is definitely bad news for China and lots of other developing countries as well. To be honest, I'm really not 100% sure what the CCP will do here, though it will almost definitely involve just lying about the Sinovac to an extent. China really isn't having a good time. They've just had to lock down a city in the center of the country with 13 million residents, as there has been a flare-up of cases. It's also worth noting that this is a Chinese lockdown. This is very strict. There's no mercy. There's no leniency. This is very bad for an already struggling Chinese economy, and it's by no means good news at all. If the Sinovac vaccine really doesn't work, which is the data we're getting at the moment, then this is only going to get worse for China. Now, we also saw that Tencent is going to pay out a one-time dividend of JD.com shares to their shareholders because maybe they don't really want ownership of the company anymore. Basically, JD slid on this news. There's going to be lots of new shareholders who probably don't want to directly own JD. So it's very likely that they will just sell the shares when they come, forcing prices down, and markets are pricing this in advance. Yeah, this is a bad day to be Cathie Wood as well. JD is one of the only Chinese companies that she still holds, but even JD isn't immune from weird things in China. Now, it is definitely possible that this could be happening as a result of CCP commands. It's possible that China is basically trying to break up tech conglomerates, so will demand each company becomes independent from one another. Alibaba could see something similar happen. They could be forced to withdraw from their successful investments in other startups. China's crackdown just doesn't seem to be ending, and this could just be the next stage of targeting these tech giants. China's still just not a safe market to be investing in. It's never going to be at this rate. Now, I mentioned yesterday that Intel were trying to limit their exposure to Xinjiang due to forced labor concerns. They've had brand ambassadors cut ties with them. State-run media outlets are screaming bloody murder as well. They are very, very unhappy about this. Now, of course, Intel came out and apologized to China. I think about a quarter of their customers worldwide are Chinese. But they're not changing their policy, so it's clear that they're just trying to ease this criticism and move on with this policy decision. I still think Intel's doing the right thing here. I'm actually quite surprised that they're doing it on their own as well without any, mandate from a certain government. On the other end of the spectrum, however, Apple has appealed to the SEC, the Securities and Exchange Commission, to block a shareholder proposal to provide more transparency regarding their use of forced labor in Xinjiang. This is pretty shameful stuff. Apple is going the complete other end and trying to actively hide what they're buying in China, but this isn't exactly surprising. This is the kind of thing Apple does and has done for years. Now, the SEC denied Apple's claim. It failed, so they're going to have to face the music eventually. They're going to have to discuss with their shareholders their use of forced labor and, sourcing computer chip parts from Xinjiang and things like that. Now, that is it for China for the day. So we move on to crypto and Web3 and a lover's spat between Jack Dorsey and a Web3 venture capitalist called Anderson. Dorsey is very unhappy with the way Web3 is being portrayed. He's claiming that no, you, the people, will not own the internet that you use. It will still be owned by venture capitalists and entrepreneurs. Now, Dorsey is right here, to be honest. Control is still going to lie at the top, but it's at least a better system than we have now, where control lies entirely of the hands of the very few tech conglomerates around. That being said, Dorsey is a famed Bitcoin maximalist, and in my opinion, he's dangerous and awful for the future of crypto. The Lightning Network destroys the only real benefit of Bitcoin, and that is decentralization. And Dorsey has proven that he can't be trusted in a position of power after so many years as the head of Twitter. I don't like him at all. I don't trust him at all, but he is kind of right here. Web3 is still a gimmick. It's still a buzzword to try and help startups raise more money, just like blockchain was in 2017, .com was in 1999, and Meta is right now as well. Hopefully it evolves into something real in the future, but it isn't there yet. Now back to Elon Musk, of course, and he and Tesla actually had a crazy day. Now Elon did an interview where he said that he was done selling Tesla shares, despite only being about 3/4 of the way through his commitment, but he said that it's basically enough. Tesla shares, of course, shot up on this news, went from $900 a share to back above $1,000 a share, which is crazy for one day. The only problem is that after this interview was done, Elon actually did go and sell another $500 million worth of Tesla shares. So who knows what's actually happening? He said one thing and did something entirely different. The retail market seems to have just taken Elon at his word though, and is just assuming he didn't sell shares and he has stopped, even though he maybe hasn't. Maybe he is now done selling shares though after that $500 million. I don't know. No one knows. Elon's very hard to read. He's always doing slightly odd things like this, and it just makes it very difficult to predict what's going to come next. That being said, Tesla shooting up that crazy amount in one day is crazy, but it's even crazier when you consider that it's just like the Hertz news, a headline that wasn't really true. Tesla is the most bet on stock in the world. It has more options volume traded on it alone than anything else, and it isn't even close. It is a very speculative stock, and there seems to be a lot of dumb money playing around with it too. I mean, I'm not trying to insult people. Dumb money isn't an insult. It's just, unsophisticated investors. But I mean, how else can you explain the company's market cap increasing by $100 billion in a day on news that just wasn't true? That is pretty much it for the day. We are getting very close to Christmas. I'm still hoping to put out a video tomorrow, even though I think markets are closed. I'll take Christmas Day off, and then I'll be back with you for Boxing Day. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for my own personal investments. And if you join before December ends, then the next month will be entirely free. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world-famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up. You don't have to buy anything, so if that sounds interesting to you at all, then make sure to check it out. There's also a link in the description to BLOCKFI, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you'll get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.